What's happening? Gather around the table, man. We live. This is Sunday swing trade setup. Let me get a little more light in this thing. Sunday swing trade setup, man. So last week I wasn't able to do Sunday swing trade setup. My bad, y'all. But I'm uh I'm gonna get back to it this week. So let's get into it. So let's see what the market is looking like, right? So let's do, how we always do. You gotta see what the direction the market is going. The trend is your friend, and you'll get in trouble going against the trend, especially with a swing trade. If the stock market is trending up, you can do a put option on a day trade, but you never want to go against the trend on a swing trade unless it hits a bottom. All right, so we're gonna start with the fear and greed index. Well, first let's go back to 2 weeks ago. Swing trade setup 2 weeks ago. Let's see what let's see what I was talking about, and let's see how that played out. Right. So let me hit play on this. This was 2 weeks ago.
So on the daily time frame, we got
So it looked
on the
like 2 weeks
stochastic
ago I
later,
was
which is
talking
this
about
one all the way
PayPal.
down here at the bottom with the orange and blue lines. As you can see, we're at the bottom. This blue line is at the bottom, which means we're oversold. You move up from that on the orange.
Talk that talk, my boy. All right. So we're gonna see what PayPal was looking like about 2 weeks ago. I didn't do that swing. I did like one swing this week. Um, but let's see what PayPal is looking like. Um, all right, so if we go back, let's see, let's go back. Let's see where I was in that video. All right, so PayPal looked like it was at I don't know what that is, looked like it was at I don't know, whatever that blue line is, probably the 100 or something like that. And it looked like I got a line drawn through it. So maybe that line is still there in my chart. Let me see. But it's right there at the MA, long red candle. So let's see. Let's pull it up. All right, so if we look, I call PayPal right around. Let me make it a little more clear for y'all. But I call PayPal right around. It was probably this one right here, right? So when you do a swing trade, ideally, ideally you want to hold for a longer period. Most of my swing trades have been for a week, but lately I've been starting to hold out for longer periods just to kind of give me a better, a better chance at profit, right? So if you entered the trade, if you entered the trade the day I said, it would have been a good swing trade. The next 2 days, you would not have been profitable. But if you held for at least, let's see, you would have held at least for 3, 4 days, definitely by the end of the week, you would have been profitable. I didn't do that trade. I think I did a swing. I want to say I did a swing on Apple. Let me see. I think Apple was a one that I did a swing on. Um, Apple was the one I did a swing on, and to be honest, I got out way too late. All right, so on Apple, I did a swing. We came down to the bottom of the Bollinger Band on Apple, right over here, and we created that red doji. You know what I'm saying? We created that wet red doji. Let me pull up a doji candle so y'all can see what a doji is and what a doji means. Um, but I got into an Apple swing. Let me go back where y'all can see me. So I got into an Apple swing right at this red doji. That was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that, yeah. So I did this swing probably like two weeks ago. It was probably around 10 days ago. So I think it was last Sunday I did this swing. When Apple hit this doji, I rode, I got in the next day and held for this day. I really wish I would have held for one more day because I would have been all the way up here. But you know what I'm saying? Lately I've been doing short swings, 1 to 2 days. I was profitable on that Apple trade. Apple swing, it was the first swing I did at least in like 2 weeks, right? But let's go into the doji. So the doji candle, this is on a daily time frame. When you're looking at the daily time frame, the candles have a lot more significance in a swing trade because the candle on a swing trade is going to let you know what the next day is going to look like, right? So a doji candle is a single candle chart pattern, candlestick pattern, in which the open and close price of the security or market are this very they close on open and close. So the stock could have opened here, went up, went down, but whatever happened, by the end of the day, it ended right near the close, right? So this small line is the body of the candle, and the lines going from it up and down are the wicks of the candle. When the body of the candle is that small, is telling you that the relationship between the buyers and sellers is indecisive. You know what I'm saying? Buyers really didn't win heavy on that day. Sellers didn't win heavy on that day. So a doji candle is usually a good reversal candle. So if we go back to the chart and we look at Apple on the daily time frame, we see that Apple made this doji down here at the bottom, this red doji. We were outside of the bottom of the Bollinger Band. Like when a stock goes very much outside of the Bollinger Band, it's nowhere else for it to go. It is either up or down. You know what I'm saying? So like right here, I really wish I caught any stock. You know what I'm saying? I missed my first swing trade kind of recently before this drop, so I was hesitant to, I was hesitant to get in a swing. But this drop right here was perfect. The stock dropped way outside of the Bollinger Band. So if you would have entered when it dropped and held it just for a day or 2 days or 3 days, you could have held it for 2 weeks. That would have been a really good swing trade. But yeah, so we were at the bottom of the Bollinger Band over here. The bottom of the Bollinger Band is this green line like this, and the top of the Bollinger Band is the red line up top. The stock usually trades within it. So if it's at the top of the Bollinger Band, expect the stock to start making a downward trend eventually. If it's at the bottom of the Bollinger Band, you expect it to go up. Also, on top of that, the RSI was oversold according to the Bollinger Band. I got in before this indicator even turned green. You know what I'm saying? So I should have held it. It was a good snipe play. But that was my first swing I did in a minute. So let's get a temperature on the market sentiment, right? Let's see what the market looks like it's gonna do. So let me hit y'all with the fear and greed index first. Let's see how the market's feeling, right? Fear and greed index. You want to be greedy when others are fearful and fearful where others are greedy. Right now, we are greedy. We're not extremely greedy. So The market could get even more greedy than it currently is, and it could go up. It could go up some more. You don't really want to fight the trend. The market is going up, so expect it to continue going up until it proves you otherwise, right? Now we are down, or we are up from about a week ago. A week ago, we were we were a little more fearful, and now we're greedy. So we're going in a greedy direction. So when the market is greedy, you want to go with the trend until the trend is over. So that's a fear and greed index. Now let's go to the charts. I only got one swing trade this week. Um, and I really don't like how much the stock price costs, to be honest. So I'm probably not even going to participate in those swing trades this week, but I'm gonna at least give y'all something in case y'all feel like swinging. Right. So we got the VIX, the volatility index. When it's down, the market is going up, and when it's up, the market is going down. So according to my normal smooth MACD indicator here at the bottom, it's in a downtrend. But also according to the RSI, it's about to cross this middle line going up. So the VIX is not telling me much. The VIX has been going down, but it also looks like it could be reversing. So ain't no telling. It could just be a miniature pop for the VIX to continue to go back down more, or the VIX could be reversing. So if the VIX is reversing, going in the other direction, that means the stock market will go down. So let's actually take a look at the stock market and look at the VTI, the total stock market index, and let's see what the stock market is looking like. So VTI, we go over here. VTI, it has some room to run. It's been trending upwards. It looked like it's been down past couple days, but overall still trending upwards. We're still not oversold on the RSI, and our normal smooth MACD indicator is still green. So we're in the uptrend still, but it's too close to the top of the upper Bollinger Band for me to really be comfortable, doing a swing, unless I found like a perfect setup and I'm doing like just one overnight swing, right? So I'm gonna probably sit it out this week. I'm expecting a crash, what I'm saying, or a correction, not a stock market crash, but I'm expecting a correction in the upcoming weeks. So I want to trade puts, or I'm still thinking bullish. Probably next couple of days I'll trade call options or whatever the market shows me. But I'm really not gonna swing in probably until like mid-October, when the market gets back down to the bottom of the Bollinger Band, or the RSI goes to the bottom, or whatever. I like sure situations. So let's go to my one stock. Let's go to my one stock that I kind of like for a swing trade. I think I actually mentioned this stock on stocks swing trade Sunday too. But this week for a swing trade, I like Costco. Um, and the reason why I like Costco is because, so if we look at this first indicator at the top with the orange and blue line, that is the stochastic indicator. It shows overbought and oversold. So when the line is at the bottom, it's oversold. When it's at the top, it's overbought. Whenever it gets in those areas, it can hold that area for a while, but the next move is a reversal. So if you look back, whenever it's hit that area, it can stay in that area for a while, or it can reverse. So with Costco, we got the stochastic at the bottom. On top of that, if you look at the RSI, let me make the RSI a little bigger so it's a little more visible. But on the RSI, that is oversold. So it's not oversold on traditional RSI because the RSI is not at the bottom. But I put Bollinger Bands on my RSI. It's a hidden support and resistance. So we are below the Bollinger Band on my hidden support and resistance. So we don't have too far, you know what I'm saying, to go as far as going outside of the support and resistance. On top of that, we got a mini divergence, right? So Costco, we got a little divergence on Costco. Let me show y'all, and then I'll pull up the definition too, just in case you ain't rocked with me before and you don't know what a divergence is. But we got higher lows on Costco, and we got the indicator making lower lows. We got this indicator too, from here to here, making lower lows. We got this indicator here, making lower lows. So we're oversold. We're oversold according to the Bollinger Band on the RSI. We have a divergence where the stock is making higher lows and the indicators are making lower lows. So let me rewind so I could show y'all what the divergence is and y'all can see what I'm talking about. Divergence trading. Let me show an image. All right. So divergence trading. So if y'all see this, a divergence is when the stock is moving in a different direction than the indicator or angled in a different direction. So if you see this, a bullish divergence is when the stock is making lower lows and the indicator is making higher lows, or a hidden divergence, the stock is making higher lows or the indicator is making lower lows. And bearish divergence is the same thing, it's just the top of the stock is making higher lows or lower lows. So if we go back to the chart, you can see that Costco, you can see that Costco has a divergence, right? But on top of that, Costco also has the hammer candle at the bottom of a downtrend. So for the past week or so, it's been a little up and down, but ultimately it's been going down, right? So now we're going to drop the hammer candle. So y'all can see the hammer candle and what the hammer candle resembles. All right, so if you can see, the hammer candle is a bullish reversal candlestick that appears at the end of a downtrend. It has a small body and at the top it has a small body at the top and a long wick at the bottom, right? So if we go back to Costco, and it's not legit a hammer candle because the body is not too small. Let's go back to Costco and see what that looked like. So it's not legit a hammer candle because the body's not really that small, but the wick is long. And when you have long wicks, that shows rejection, right? It shows rejection, it's showing that something pushed that stock back up. So I'm expecting Costco to make a reversal. It looks like over the last 2 weeks, it's been trending downward. Now, this stock could possibly go down some more. So, how I would play this, I wouldn't put your full position in right away. If you want to enter on Monday, you can enter the trade on Monday, but put half of the position in. And then if the stock goes down more, you know what I'm saying? You can put the first position in for like a week or whatever. and then put your second position in, you know what I'm saying, for 2 weeks or whatever. Like allow the stock to come down some more if it does want to come down some more, because it has room to come down. This is me trying to snipe the bottom and hit a perfect reversal, but the stock could go down a little bit more or whatever. But the stock market has been going up. Not too many of the stocks have been going down. So to catch a stock at the bottom right now is you know what I'm saying, it was kind of hard. So that's why I only found Costco. So if you are a swing trader, sometimes you're gonna have to sit out and let the market, you know what I'm saying, give you perfect opportunities. I did a swing trade on Apple probably 2 weeks ago, and since then I've been day trading. I've been day trading, um, trading on the way up, expecting relatively soon for a sharp, you know what I'm saying, reversal, because when the stock market comes down, it comes down hard. You know what I'm saying? It comes down for a shorter period of time, but it comes down a lot harder. So to go over what I'm talking about, if you look at Costco, for example, it's been going up all these days. You look, it's going up, 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 up. But just for the last 2 weeks, these candles going down are a lot bigger. These red candles going down are a lot bigger than these candles going up. So the stock market over a long period of time goes up, but when you're trading, you have good days if you play to the downside when the market is going down. You know what I'm saying? That's how you load up, you get more capital because them down days can produce you a lot of money. So that's it, man. The stock market is trending upwards. There's pretty soon to be a correction based off of the chart. You know what I'm saying? Not necessarily a crash, but the stock market is going to start to come down pretty soon. September is usually a bad month for the market, and it's been a good month so far. So October, November, sometime October is probably going to come down so that way the holiday season, November and December, can go for another bull run. So holiday time, y'all probably going to see me do a lot more Sunday swing trade setups. I'm actually not going to do any swing trades this week, but y'all going to see me next Sunday to where I'm going to drop possible plays and more education for y'all. And I'll let y'all know when I do these swing trade education if I'm actually going to jump in or not. Mike the Money Motivator, man. Y'all like and subscribe.